Stellantis shares popping as the automaker reports earnings and announces a new buyback plan despite warning of a turbulent year ahead. Senior autos reporter Pras Subramanian was on that call, so a little bit of mixed messaging there maybe.
Yeah, so strong earnings are in full year 2023, so good revenue, good profit outlook here, but they kind of warning about this turbulent year ahead. A couple of headwinds they're talking about is EV product mix, of course, the kind of shifting prices and demand and the offerings they have at the dealerships. Talking about, of course, higher labor costs because of the strike, and then, of course, price normalization, lower prices coming in. So these are the kinds of things that they're concerned about, but they think that, at least in America, compared to the other big three, they have better pricing power and they can kind of wade through that. On the call, CEO Carlos Tavares was on there. This guy's kind of known as I wouldn't say a maverick, but he's very opinionated. And he talks about how we weren't ready for the EV transition years ago, and now he's sort of having his kind of moment to roost here. But he does say that in 2025, in North America, they'll be profitable with EVs. He does think that a shared platform, what they did as opposed to GM, where they said this one platform can use for gas and ICE cars, and EVs. And also he said that margin parity is needed for EVs and ICE vehicles in order for them to compete against, quote, the Chinese offensive. So,
how close are we to that?
He thinks that in 2025 you start climbing towards that. Probably not till mid to late decade, I would say. Yeah, for sure.
So we heard from Stellantis, Pras, today, but also Ford's Jim Farley.
Yeah.
I thought he had a lot of interesting to say. He talked about China too and kind of the ramping competition there, but also was to kind of open up working with others.
Yeah, he sort of been rumblings of this for a while now. He kind of hinted at sort of how they can make cars and batteries cheaper in the earnings call, and today he sort of indicated that he could work with potentially Chinese partners to do that from a battery point of view. Adam Jonas has been talking about this for a while now, or in his last note, hinting that that could be a possibility. They have a JV operation in China that they could leverage there. But also, just like Tavares, warning about China, warning about how he needs to have a really cost-competitive, cheaper EV platform to make these cars that people need at a price that'll work for them. And also today, this is new to me, he mentioned that 20 to 30% of revenue is at risk due to Chinese car automakers coming to the U.S. Right now, there's almost a 30% tariff on Chinese-made vehicles, so they're probably happy about that, but we'll see if that sticks around.
Wow.
All right, Pras, thank you. Appreciate that.